Today, Bitcoin and Ether climb after inflation rose less than expected in May. Two House committees advanced the Clarity Act crypto market structure bill. And Stellar CEO Denelle Dixon discusses PayPal's plan to launch the PYUSD stablecoin on the foundation's blockchain. Welcome to CNBC's Crypto World. I'm Mackenzie Segalos. Now, crypto prices are in the green after data out this morning showed that consumer prices rose less than expected in May, as President Trump's tariffs had yet to show a significant impact on inflation. Now, as of noon Eastern, Bitcoin inched higher by more than 0.5%, trading above $109,000 for a second straight day. Ether and Solana's Sol token, however, made bigger climbs, with Ether rising nearly 5% and Sol increasing by nearly 6%. Okay, let's talk about the top stories. Two House committees advanced the crypto market structure bill yesterday, marking the first of several expected developments tied to crypto legislation this week. The House Financial Services Committee voted 32-19 to advance the Clarity Act, which is aimed at setting up crypto market oversight. The Agriculture Committee also voted 47-6 to advance the bill. It will now move for consideration by the wider House. Financial Services Committee Chairman French Hill said that he was, quote, proud that the two committees took the vital step in advancing the bipartisan Clarity Act. Agriculture Committee Chairman G.T. Thompson said in his statement that the bipartisan votes advancing this bill out of the House committees proves that the timing is ripe to advance common sense legislation that will finally bring certainty to the digital asset space. Now, at the same time, the Senate's Genius Act stablecoin regulation bill is moving toward a final vote, with the full Senate expected to take it up this afternoon. Senate aides tell CNBC that more than 100 amendments have been filed from both Democrats and Republicans on the Genius Act. Some of those amendments focus on prohibiting the president and other government officials and their families from directly or indirectly profiting from a stablecoin venture while in office. Another amendment was filed by Senators Josh Hawley and Richard Blumenthal that would prohibit large online platforms from issuing a stablecoin. Next, Connecticut lawmakers unanimously passed a bill banning crypto use in government. Yesterday, the state's General Assembly enacted legislation that would specifically prohibit state and local governments from making or accepting crypto payments or investing in digital assets. It also bans the establishment of a reserve of virtual currency. The bill goes into effect October 1st, giving players time to adjust to the framework. This comes after lawmakers in some states, including Wyoming and South Dakota, rejected to establish state-level crypto reserves. Last, yet another crypto company is reportedly setting their sights on the public markets after Circle's successful IPO last week. According to the Financial Times, Peter Thiel-backed crypto exchange Bullish has confidentially filed for an IPO with the SEC in recent weeks. Now, by filing confidentially, Bullish can test investor appetite without immediate scrutiny on the company's financials. Bullish tried to go public via SPAC back in 2021, but that fell through the next year amid a regulatory crackdown and as a sudden rise in interest rates weighed on equities. We reached out to Bullish about the FT report but didn't hear back right away. Earlier this week, we also told you that Gemini, the crypto firm led by the Winklevoss twins, confidentially filed to go public on Friday. All right, for our main story, today PayPal and Stellar announced that the payment giant is bringing its stablecoin PYUSD to the Stellar blockchain for cross-border remittances and payment financing. I spoke with Stellar CEO Denelle Dixon about this new partnership and institutional adoption of tokenization more broadly. So PayPal announcing today that it's bringing its stablecoin PYUSD to the Stellar network with a focus on remittances. So talk to me about this latest partnership and why the focus on cross-border payments.
Yeah, so Stellar's always been hyper-focused on cross-border payments and really asset issuance. And so these two things come together with PYUSD. They really wanted to be able to have ubiquitous use of the asset and also just to be able to get it into the hands of like humans and businesses that need to leverage this globally. And so when you think about where you want to do that, you want to do it on a chain where there's wallets that are going to be able to accept it and use that for cross-border. We also have MoneyGram, which actually really helps them on the edge to be able to do the on and off ramping. So there's just a lot of really great use that they can see with respect to Stellar. And we're just really excited that it's going to be on chain.
Now, we've been tracking this evolution for a few years now of TradFi getting on board with stablecoins. But what's the view like from Stellar? Have stablecoins really clicked for traditional corporations, and has that education gap closed?
Yeah, I think so. I mean, I really think this last probably 8 months, 9 months has been pretty remarkable just in terms of the industry really bringing to light all of the value of stablecoins, but really just having the United States government really understand it and really have a focus on it. Just even today, they've moved one of the Stablecoin Act, and they're moving it to a floor vote. So all of these things happening really helps industry to say, oh, wait a minute, this is an opportunity for us to see the value of stablecoins. So it's not so much talking about like the blockchain technology. It's really saying, what are stablecoins going to do for our business? For example, like in the treasury side, you've already seen like tokenized treasuries have really taken off, and they've really done wonderful things for the businesses that have issued them. It cuts down costs. It opens up the market to them for new users. So there's just a lot that we've seen in the last 9 months to a year where there's just a lot of growth here.
And I'm going to ask you about that legislation in just a minute, but I think one area where we're still waiting to see mass adoption is actually among consumers. A lot of this case for stablecoins is being made to businesses, but I'm curious how you make the case to your retail user who might be used to using credit and debit cards and maybe aren't as focused on the speed of stablecoins.
Well, so the really interesting piece of this is that actually the retail users shouldn't have to focus on what they're using. The piece of this that we wanted and needed in the industry for such a long time, and I think it started to happen for us maybe a year and a half ago, was just the user-friendly design to make it so simple and to have the ease of use. So when you combine that simplicity and so that you just have this wallet, and yes, it may be stable coins that are operating behind the scenes and you have an opportunity to see that it is, but it really is just the fact that the wallet is really simple to use and it solves your problem. And so when you combine that with this momentum that stablecoins have really gotten because of the legislation in the United States, because of the industry really, and because of the financial services industry really saying, wait, this is actually an opportunity for us, those two combined really make it so that mass adoption can happen. So you can't have one without the other. You need user-friendly design and you need the stablecoins themselves.
Now, let's shift back to Capitol Hill. How are you feeling right now about progress made to regulate this space, especially after that setback, a bit of a hiccup earlier this year? Are we back on track with this bill?
I think we are. I mean, we talked in the earlier part of the year, we all assumed that it would happen by July. There's still an opportunity, as you see just with today's vote, for it to happen by July. If it doesn't happen by July, it'll happen soon after the recess. I think that we're back on track. Really like the work has been happening for so many years. I can't tell you. I just believed 4 years ago that stablecoin legislation was the low-hanging fruit and the place to start for the United States in terms of regulation. And it is mind-blowing to me that it has taken this long, but I'm just so happy that we're here, and I think we're on track for it. The fact of the matter is we have now potentially stablecoin legislation, and then there's so many other opportunities with these treasuries wanting to be moved as payment use cases. So there's just an opportunity to really like see the next stage, and we got to get past this one first.
Last thing on stablecoin legislation. So we've got Genius Act in the Senate. We have Stable in the House. Do they get it right? Do you like what you see? And are you a big backer of those bills in particular?
Yeah, I mean, we've done a ton of work on this for years and these pieces of legislation are really part and parcel of the work, not just that we did here at the SDF, but lots of folks that are in the industry have spent a lot of time making this right. And I think they do. I think they get it right. I think they get it to the place where, frankly, where we are with, it's as bipartisan as it's going to get at this point. And I think that's important because I've always believed that this should not be a political issue. Frankly, tech should not be a political issue. And that's really what this is about. And so I think that we're to a place now where we are very supportive of both of these pieces of legislation. And they've really kind of combined to take over they're very similar in terms of their outcomes.
Shifting gears, we saw Circle's successful IPO last week and are certainly waiting for more crypto companies to come to market. What's your take on this push to get more crypto firms on Wall Street? And would Stellar ever consider a similar move?
No, we're a foundation, so we won't consider that move. But I'd love to see this happen. I think that, it's one of those things that I don't know that it necessarily should be a push to see crypto companies get to Wall Street. What I do think is important is that this industry recognizes the value of itself and also that Wall Street recognizes the value of the industry. I think before it wasn't taken seriously as much. And I think now we're seeing players not just be taken seriously, but also we're seeing a lot more focus on making sure that we ourselves in this industry stand up a little bit taller, we focus a little bit more, we make sure that we're taking all the regulations and the opportunities out there in the world more seriously. So I love that, because I think it actually just brings a lot of value to what we're offering at the SDF, but also to what the technology can do for financial services and for the industry at large. So it makes me really happy to see it. But I don't think it should just be a push to get them there unless they're ready. And I think Circle was. And so we have to make sure that we're very careful. We don't want to see things happen later with, other companies that might not be ready for that. And then they go and then, we have a negative occurrence in the press. We don't want that.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.